Hey traders, welcome to Charts and Coffee. Happy Wednesday, everybody. Great to see everyone. All right. Well, I see a lot of questions already queued up, and that is awesome. So yeah, let's get into it. All right. So first up, hey there, Peter. Trying to scalp the micro Nasdaq, but difficulty to set stops right. My risk tolerance is 50 points. But what if the average true range is well above that? What criteria do you use? Well, Peter, I guess two things right off the bat. One, I don't scalp. That's not something I tend to do. Nothing wrong with it. I just don't do that. And I don't use ATR either. I do not use average true range. I do use its unbiased, of course, slightly more awesome cousin called the price movement range. And there's a lot of ways to think about the difference between price movement range and average true range. Average true range is you're looking at a certain set period of time, usually, I don't know, 7, 14, 21. What's a typical ATR setting? I don't use them, so I don't really know, but I've seen anywhere from 7 to 21. So now you're looking back 7 to 21, whatever the interval is. So that's a pretty short period of time. The historical price movement range kind of looks at the same thing, but it looks at it in a bigger way. And that is 6 months of typical price movement range. So you're doing the NASDAQ. Hang on, let me pull up the NASDAQ here. If you're doing the NASDAQ, then in terms of what time of day, see, this information is mind-blowing to people sometimes because the typical price movement range depends on the time of day. What time of day are you scalping, right? Is it Asian session? Is it pre-US? Is it the European UK Open? Is it right during the heart of the US session? So this is oftentimes what I'll expect in terms of volatility. And I use time and volatility based stops. And I want to, not exclusively, but it's definitely part of sort of the process of understanding how far a market could go. And that could be in direction of my target. That could also be in the direction of my stop. Okay, so hope that helps and gives you a different paradigm, all right, to think about. All right, next up is Raghee looking at the sub-market for the Qs. Love it. What else has to tank for the NQ to dip lower? Apple, Microsoft, Amazon, Google, Tesla, looking to sell the rip. Air conditioned gypsy, as am I. So if I look at the NAS, and we'll pull that up right now. All right, get my journal out of the way here. So if I pull up the NAS, all right, and let's say you mentioned, let's grab the first one, Apple. And I want to compare the market, the NASDAQ to Apple. All right. What's the structure on Apple? What does it need to do in order to move lower? All right. The structure on Apple is far more neutral to slightly bullish momentum than the NASDAQ. But of course, as you mentioned, that's not the only factor. What if I were to compare NASDAQ to the XLY, which is something I'm bearish in? Do you see how the NASDAQ is bearish trend, bearish momentum? I'm looking at the very bottom of this chart, by the way. Notice how the NASDAQ is bearish trend, bearish momentum. And the XLY, the consumer discretionary, is also bearish trend, bearish momentum. Well, yeah, every now and then I do drink water. I mean, it's kind of defective because there's no coffee in it, but I do try to drink water every now and then. So notice the structure of both are pretty bearish. As we rally into the 34 EMA wave, as we rally into the 200 exponential, which is that white line right there, as we rally into even this previous, take a look here. I'm going to pull this darvis right from there. Take a look at that. That darvis is pulled from right there. That's my automated support and resistance. Darvis 2.0. By the way, Countdown Trader is here. I've been talking about these tools so much. I've been getting emails about them. And so you can see how I just extended over this automated support and resistance. If you head on over to countdowntrader.com and scroll down to the bottom, I have this really skinny here, but you'll see the free downloads. If you are on Thinkorswim and you're wondering, Rog, where the heck is this Darvis 2.0 hiding? I see the propulsion. I see the grab candles. That's great. I want the Darvis. Click on this Thinkorswim link, either one of these, and it's going to take you to a Dropbox link. I don't know why the third and fourth tool aren't there, but I guess we just ran out of space under the free downloads. But just click on the Thinkorswim link, and you'll see that we have grab candles, propulsion, and the Darvis 2.0 in a Dropbox folder, and the ThinkScript's there. Enjoy, put it on your chart. It'll change your life. So put that on there. So countdowntrader.com, and then you'll see what I'm looking at. You'll see where the wave is kicking in. You'll see where the propulsion's swooping in. You'll see where that Darvis is. So the closer we get to that, the more likely I am to start looking for that exhaustion, that ceiling, and I'll look to set up a short. It doesn't mean that I'm just going to sell into strength. It doesn't mean that I'm waiting for a specific price. And this is where I talk about our opportunities in our trading to think about, and I'm trying to find my favorite Ted Williams picture. I'm sure many of you have seen this before. Where the heck is it? It's here somewhere. But anyways, I'm trying to find my favorite Ted Williams picture. And that is the mentality that we have to keep, which is that idea of, is the trade in our zone? I'm really specific. Look how specific Ted was about those 3 red dots there, those 3 red zones that said, hey, this is my pitch. We need to wait for our pitch, right? And that's what I see there. So my pitch is going to be based on that zone created by the wave, by the 200 exponential, by the Darvis. So that's what I'm looking for. Now, if I can find similar weak setups in those stocks or even in the sectors like XLY or XLC or XLK, then I'm in really good shape. And that's the plan. And if you haven't checked out the video from last night, here it is, how and where to short the rip. Now, yesterday, by the way, we were buying dips. Can you be long and short in this market? Yes, but not in the same names. We have a long watch list. We have a short watch list. And by the way, those of you in the Sector Secrets Mastery, we're going to be getting into the list, because today's notes are going to be basically all about right here, long, short, or chop. That's the plan there. So keep that in mind as we are all going through this market right now. There are corners of the market that I'm very bearish. SMH was another one of them. So this is on the Simpler Trading YouTube channel, how and where to short the rip. Yes, there are opportunities to short, but there are also opportunities to buy. Right now, our open book is mostly longs and has been since the end of January. But when we move higher, we close that distance, right? So get those tops indicators on your chart. Take a look at building a long and short watch list. And by the way, giving y'all plenty of notice, on March 9, I'm going to walk you through what we've been doing in the mastery and this sort of mentality of a long watch list and a short watch list, which I think for some traders is actually pretty different maybe from what they're doing right now. All right, great question. Great way to kick it off. Philip, good morning. Thanks for all the alerts yesterday. I did my first 2 paper trades. Feel so grateful. Oh, my pleasure. Do I? You have alerts for? Oh, so this is a great follow-up. So I have this zone, right? We have a price that's associated with it. So regardless of whether you're on TOS, TradeStation, this is TradingView, right-click the chart and ask to be alerted to when the market's rallying to that level you want to consider shorting. I had something as aggressive as 14,940 using a process called a 4-day average, or what's known as a 4-day box. The rest of the trade is sitting, as you can see, a very tight layered set of different indicators saying, yeah, this level could be an exhaustion level, and we'll start to price maybe XLY, maybe individual boats within this tide of the Nasdaq, but we'll place alerts for all of it. So before we get into a trade, what we do is we use this is what I teach people to do. Use your platform to babysit your trade ideas. Use your platform to keep an eye on things that we possibly could not keep track of. 12, 14, 20 symbols maybe on our radar, maybe 6 or 8 of them have setups that are just about there. Closing the disk norm alerts you to it, right? So definitely something to keep an eye on. Hey there, Carla. Well, we'll see you this morning, 9:20, right after Charts and Coffee. I'll see you in the trading room. All right, next up is VZ. Hey there, TT. So VZ's part of the IYZ, which has been a dumpster fire, beautiful downtrend, great double red. So we're taking a look at VZ. Now, if I take a look at what's going on in VZ, and let's kind of compare what's going on in do you see that? That's kind of neutral and bullish momentum. And then if I want to go ahead and compare that to IYZ or even the XLC, see how the XLC or IYZ are red over red, and this stock is bullish momentum neutral. So it's doing something different than the tide. If you want something that is bucking the trend, I typically don't want to do that. If the overall tide is going out for the group that this stock belongs to, I'd rather be trading in that direction. So another way to look at it would be, let's take a look at DIS. You see how DIS and XLC would be a really good combination of the outgoing boat and tide. Even Comcast is a little bit, again, more sympathetic to the downside. So I would probably say that it's not a bad symbol. I would just say it's going to be a little tricky because it's sort of doing its own thing. And it's going to have to work a lot harder because it's below the 200 propulsion. It's in a weak corner of the market. So it's going to have to work really hard to fight that outgoing tide, a downward outgoing tide. So thanks for the question, TT. All right, 305. This would be a fade. Oversold, long. Yes, I agree. I agree. So, queue up that slow stochastic. You've got the darvis zone that we've entered. And so, yeah, queue up the stochastic. Nice volume ledge in here. Remember, your target is going to be about halfway up the range. I'd keep an eye on 26. You've got a point of control in that area. All right, Natty Gas, UNG. Hey there, JR. Yes, so we have an alert in Natty, and we're keeping an eye on the area. Actually, what we're keeping an eye on. We're keeping an eye on Natty Gas to slice through 14.50. So we're not in it yet. We're waiting for it to trade down to that level. Now today, you can see where we are. So when I see you all in the mastery, we're going to talk about what we do when a market gaps through our alert. Now remember, I don't have a limit order waiting here. Let the alert go off. Then all you've got to do, and half the time, gang, I'm queuing up this thing right here. I'm going to pull up my Thinkorswim, which is right on my homepage. I'm gonna log into this bad boy, and then all I'm going to have to do, knowing that I want to be a buyer of the 14 call, is I'll just bring up right on my phone, and I'll look at the bid offer, and I'll usually either split the bid or work the bid to get in. So yeah, we'll definitely talk about that this morning. UNG not only is in the buy zone, it's sliced down through. It's probably going to be a pretty interesting opportunity, but you all know also, if we gap and there's a lot of bearish momentum, A, why? B, do we wait for a pause pattern? And we'll definitely talk about that this morning. Great question. Is Cliff, CLF, and UAA short before earnings this week? All right. So Jalen, structure before strategy and the earnings hot zone. Now remember, what are hot zones? They're scheduled economic releases. And so when I'm looking at earnings, which is one type of hot zone. So hot zones, by the way, that's a phrase I coined back in my either second or third book. So about 15 years ago. And hot zones were actually in reference to the little red icon over at Forex Factory, because I was trying to teach people just to memorize which economic events that we need to keep an eye on. And then I realized, oh, great, a lot of platforms do this, but Forex Factory is great. They put this red hot, I call them red hot zones, this red icon next to what would be expectedly high impact, high volatility scheduled events. Look, if it's not scheduled, we don't know it's coming, right? So there's lots of different kinds of hot zones. And this is where, for those of you wondering, where the heck did that even come from? It came from my looking at the little red icon saying, hey, that's hot. Be careful. So earnings are one type of hot zone. And by the way, when we want to think about earnings, when we went into earnings season, Trish, who many of you know if you're in any of the rooms, was thinking, hey, you know what? We need to revisit the 642. Remember our 642 window? So early January, she said, hey, there's an earnings window. We like to play the run up into earnings. We don't want to be playing this close. So check out that post, Jalen, over at Countdown Trader, the 642 earning window, and you'll realize that I'm not going to guess at the direction here. Look, DVN was a question that I had, and this was on our radar. It's part of the overall uptrend of XOP. We're long XLE as of yesterday, and we've been very bullish on crude. It's a great, long, bullish, excellent uptrend in the market. And I love this trade. And some folks asked me buy it. I said, not until it touches that green dot. It did yesterday, right? But this is here. I see those two lines. That's the window that I typically try to avoid. But I do love this setup. It's a good looking trade. But if you do wander into it, remember, you're getting ever closer to that earnings economic release. So CLF is in that same sort of window, right? So I would usually say thanks, but no thanks. But if we didn't have earnings, yeah, I would look for a short setup, Jalen. Now, UAA, it's going to be the same situation. We're right in front of earnings. This one's an even better opportunity for a potential short. And the reason for that is we've got the overall downtrend, right? Still sitting at the wave below the 200. I mean, what's not to like about that? Overall, see how we're a little neutral right now? That's okay. Look at the trend that preceded it. Red momentum, bearish. Red trend, bearish. And then we went a little neutral. That's okay. But it's the earnings that's more the problem. So I will not play earnings in that regard of sort of guessing which way it goes on the numbers. I don't do that. I'll play to it. I'll play post, but I won't play through. All right. Philip asks, what's the difference between SPX and SPY for a swing trader? When it comes to SPX and SPY, I'm always just going to focus on the ES. So specific to overnight swing trading, SPX options, it depends on the expiry and so forth. They can be a little pricey. I believe the commissions are different. I don't play SPX. SPY, look, I think there was a time people played SPX because of the zero dated options when we only had the Friday expiry for the SPY. Well, SPY now has Monday, Wednesday, Friday expiry. So I think the main advantage of looking at SPX once upon a time for the zero dated options, well, you have that now in SPY. So, but what's the difference for a swing trader? I mean, probably cost basis on the options. The price, I'd say that's the only difference that I note, because they're going to track with this thing. And by this thing, I mean the S&P futures, which, by the way, are not something I'm looking to short. We've talked a lot about which indices are bearish. I talked about that in yesterday's video, free video here at the YouTube channel. RTY and the triple Qs, or for futures traders, NQ and RTY. All right. What is the difference for the Darvis 3.0? The signals. It's a pattern within the Darvis box. So if you've got the 2.0, that's the lines. If you got the 3.0, or what we call Darvis signals, it's got the signal. That's the main difference. The lines are exactly the same. The Darvis 2.0 and Darvis signals, the support and resistance are exactly the same. The signal version gives you the pattern that I like to watch, gives you a little bit of a heads up. And sometimes if the box doesn't form, but the pattern did, like we did right down in here, right? box. Here's your actual pattern. Then there's the box later on. There's your pattern. There's the box. Sometimes there is no pattern, right? There's your pattern. I'm sorry. Sometimes there is no box. There's your pattern, right? So that's the main difference. It's that pattern. Okay. Thanks for the question, Jake. So start with 2.0. You don't have to run out and buy anything, gang. Start with the 2.0. And then if you say, hey, this makes a difference, then wait till, I have a class or that bundle goes on sale. You've got the basic building blocks with that free set of indicators, that TOPS layout that I've shared in the futures room and in the options room. And then we have a special version in the Sector Secrets Mastery. Use that. That was my foundation for many, many, many years until we started to optimize for patterns and more nuance, and hence the premium indicators. Okay, but start with those great free tools. What is Momo? It's just slang for momentum, Neil. Traders like nicknaming and using acronyms. It's just slang for momentum. All right. Okay, so gang, just like that, our 20 minutes flew by. Thanks for all the questions. Great stuff. As always, thanks for caffeinating and dominating with us each and every morning. I'll see you all tomorrow, 9 o'clock. Remember, mark it on your calendars, March 9. We'll talk about how I'm using these TOPS indicators to handle this market. And I don't know why I've had a scratchy throat. And if you're part of the Sector Secrets Mastery, I'll see you all in the room in 30 seconds. Be good to each other, gang. I'll talk with you tomorrow.